Good evening, this is Nick Inman from VolumeProfileTrader.com on Monday, April 2nd. And looking at the S&P, we had another update today, up nearly 1% on the S&P. I think the NASDAQ was up 1%, and the Dow was up 50 points or so. But focusing on the S&P, close to highs, to new highs. I do think that we are going to press to new highs. I don't think that this is going to roll over from here, though it could. You never know. But I would like to say that the path of least resistance is still to the upside. And when we get price action like we did today, it makes it that much easier to just go with it. So the easiest thing to do is go over what's working, go over what's in your portfolio, make sure that it's still working. So what I'm going to do is go from, in basically alphabetical order of what I'm holding, and kind of go from there. Before I do get to that though, let me put up the monthly of the S&P, and you can see we are bouncing for right now off of March's point of control, and that started overnight. You could say it was the basically the open of the day. The lows of the day today were a great buying opportunity, basically off of what was an area of balance for the second half of March, and we held those levels, and we're going to see if this is basically a mini base to another leg higher. And with that said, every time we continue to make new highs, the likelihood of us, eventually pulling back grows. So that's just something to be aware of. So let's get into it. Apple kind of looks like the S&P in terms of bouncing off March's point of control. You can see why it had such a big day today, up $19. It was, literally opened up at the March point of control and pushed higher. So as far as Apple goes, it looks good, and it looks like there's really no reason to sell. AIG, I actually own some calls out in August. I think they're the 33 strike or something like that. Actually, I'll tell you. Yes, they're the 33 strike calls. Bought them for $1.27, and they're currently up 20%. So not that big of a deal. I bought them a couple of days ago. I want to say on maybe the 29th, something like that. But what I'm seeing here is point of control for the year, $28, and what we've seen since, let me zoom in, is nice buying above those levels, or that level, since. And basically if we clear this 31 level, we can zoom out a little more, and you can see there's really no volume resistance until you get up towards 35. So that gives you a little bit of a run on AIG. I think it's going under the radar, and I think it's worth looking at. So just keep it on your radar if you're not long. Maybe you want to do a call spread or something. I went out to August just to give myself plenty of time, but I plan to sell way before then. So it's just something to be aware of. American Express consolidated today. Really nothing wrong with it. It held the levels that we're looking for it to hold, which is March's point of control. As long as we hold those levels, we're okay. Broadcom was Broadcom and RIM also, the only names in my portfolio that were down, but once again, we're generally holding March's point of control. That's what we want to see, so it looks good. Chesapeake Energy, I have exposure in this still, and it's bouncing off point of control for the last 6 months, off January's point of controls, and if I bring up the yearly chart, it's bouncing off the point of control for the year, so that's what we want to see, and we want to see it continue to the upside. Not corn products, but that kind of looks like it's about to break out. ConocoPhillips, I think this is a name that you just want to stay long over the long term, and scale out, on big rips and kind of buy the dip sort of mentality. I like this name. I think it's going to continue higher. Concho Resources. This is a name that has exposure in the New Mexico, West Texas. Their PE, it's kind of high, but they have a growth rate right now of 70%, and you're at the $100 threshold. $99.90, sorry, is the point of control for the year. We're holding those levels. You can keep a stop. I think you can keep a stop under 99 and you'll be okay. And as far as a target, I'd be looking at 116.82. And frankly, I would be more inclined to just kind of let this do what it's going to do. And I'm sure at some point down the road you can sell it at 130, maybe 135, which is obviously a pretty nice move. Freeport, this was the name, though I didn't buy the bottom. I bought a little higher than current prices, but I'm taking another shot at this, and I bought a very small position, just shares, and I'm just looking. Still, I want to be involved, and the reason why is because if we do break above $40 on Freeport, I want to be long this name because I think it's going to make a run at least up towards 44. And if that's the case, I want to have exposure and I want to be able to catch that move because I'm sure it'll be quick and you'll blink and the move's done. So I do think that there could be. I'm not necessarily betting a lot on it right now, but there could be a nice run to the upside. So it's just something that I want to be a part of. Gold. The GLD up 163. We have another dollar or so of potential upside on the 161 by 164 call spread that we own, and it's going to get there. I would assume by April expiration, which is right around this time. So generally speaking, this is where we need gold to be by April expiration, and on GLD. That's right around the 200-day moving average. So not even a big move from here. We got as high as 163.56 today. Those call spreads are up 50% right now. So we could still make another 150% on these this call spread position, and so you just kind of let it ride, and maybe you want to put a stop at break even just to ensure you don't lose the money on a trade that is in the green. But I really do think that this is just going to continue to the upside. All right. Las Vegas Sands continues to consolidate in this basically call it 56.5 to 59 range. And looking at the monthly, we're holding these levels, and until we move one way or the other, there's really no action to be taken. That's just kind of the reality of it, and I think that Las Vegas, over the long term, I don't think 59.85 is going to be the high, but it could be a couple of months before we get the next leg higher, so it's just something to be aware of. Medfast, I think it's breaking out of this base here. Really, call it $18 has been the ceiling, and now that we're pushing above this, you could make an argument for 20. You can make an argument for the mid to low 20s. Regardless, this is a company. They have great growth rate, good PE, and maybe something that you want to be a part of. I would have your stop maybe $1.25 or below, or so below current prices. So scale into this, but I do think that we are on the verge of breaking out. One thing also is earnings just happened in this month, so that's good news. That means you don't have any potential basically cautions to look out for in the next couple of months. With that said, I do not have a position, but I'm looking to get involved fairly soon. Oracle, we have the the 29 by 31 call spread. It's starting to work out pretty nice. The position's not up a lot, but there's the potential to make about 125 or 150% on the position. So that's what we're looking for, and hopefully that's what we get. But regardless, even if you want to scale in now, we just got in. Maybe it was the 26th, something like that, and I love the fact that we're sitting on the point of control for the year, and short-term momentum since earnings is still to the upside. Well, 2 earnings ago, back to the beginning of the year. So I like this, and I do think it's going to continue higher. That's why I put on the 29 by 31 call spread. Alright, potash, this is one of my biggest positions now. I'm looking for a breakout above 48, 47.75, and I'm looking for it fairly soon. And that will lead me to believe that 55 to 60 is in the cards. And it kind of reminds me, in a way, of Las Vegas Sands, where it was, in the 42 to 48 range, and then it broke out. And so this is essentially what I'm kind of looking for potash. It's a little bit different of a chart setup because it's from higher levels, and now it's kind of slowly making a U-turn. But what we're looking for is a move off this point of control level, 46.5, and a nice breakout to the upside. Right now I just own shares on it though. RIM, I initiated a position in this today, and what I did was I went out to May and I bought the 15 calls for, I don't remember the price, but and I sold the 18 calls, and the transaction ended up being 75 cents per spread. So basically I'm looking for it to come back up to these highs, which should be the generally speaking, the 200-day moving average in a matter of time. And I'm looking for these lows to hold. Every time we've had earnings, we've made new lows on RIM. We didn't do it this time. Maybe that means that we're going to press up, and maybe this becomes some type of speculative buyout candidate. I'm sure that's what a lot of people are thinking. That's what I'm thinking. And I love the fact that there's so much volume down here that if this thing gets going, if it's shorts that are selling it, then they're going to probably get squeezed pretty quick, which should help this position. I went out to May, so generally speaking, we need it to get to $18 by about here. So this is kind of our magic target area based on time and price. You could see, maybe RIM makes some type of move up there. That's the goal. The quicker it gets there, the happier I'll be to take this position off. But I do like the idea of it. Riverbed, I want to see this thing start to break out to the upside. I bought some, I want to say 28 calls. Let's see. 28 calls expiring in May. So just like RIM, I just want price action of Riverbed from $28 and up. And I think that if we get a breakout on Riverbed, we could have a pop up towards basically this. Of course, there's a potential to close the gap, but that's not really my target. Well, my target is the bottom of this range that we saw before we had this huge gap. And, a good $4, $5 pop is likely. It's in the cards, and all we need is some momentum building. One thing I want to show you is how tight the Bollinger Bands are. We had them pretty tight back in basically the beginning of the month, but they're even tighter now. What it kind of reminds me of, in a way, is Bank of America. Remember, we had this tight squeeze here, and what happened? We had a breakout to the upside, and now we're just getting consolidation. Pretty much that's what I'm looking for on Riverbed, except for this consolidation has been going on really for a while. And I do think it's close to breaking out. You can see I just pulled up a 6-month chart, and we're sitting right above that point of control. That's what we want to see. And plus we're above the 200, the 50. So now we just need buying to confirm it, and if that's the case, I'll be happy to add on to this position. The last position I have is silver, and I just have some outdated, pretty much some leaps that I own, and I do like the fact that silver is holding and continues to hold. Let me get it for you. This value area low for the year, and as long as it does that, I don't really think there's a reason to sell. You can even make the argument that, trying to form a potential inverse head and shoulders, and you can see the left shoulder, the head, and I don't know where you call the neckline. I don't know if you want to draw it like this or like this. You can draw it however you want, but if we make some type of push up towards 35, 36 on silver, I'm sure the argument will start to come out, and all you would need is a breakout, and then you would make the measured room from 26 to, let's call it 36 to be easy, and 46 would be your target to the upside, or I would just say basically back to the highs that we saw, not the highs, but the last swing high we saw back in 2011. But you do have some high volume, basically around $40, so that would probably be a target too. So Polaris, new 52-week high today. We had a 3-day light volume pullback, and now we made a 52-week high. I continue to own a small position in this just because it's too extended for me to add on now, and that's fine. Just the way it goes. So I already booked a nice gain in it. So now I'm just going to kind of let it ride. Ford, this is another name, and I don't think you take this off your radar. It continues to slowly grind up towards the top of the channel. Remember I talked about over the weekend, you had your lows at 12, and now we have a mini higher low within this channel. Now we want to see it touch this top of the channel. If you want to, we have auto sales tomorrow, but if you want to scale into this, so long as the news is okay, if we get good news, I'm going to be buying this. I'm going to be looking at the it depends on what it is, but maybe the 12 or the 13 calls. But basically I'm saying my thesis is this base has been sufficient enough buying and selling has taken place, and now we're ready to push up to the next level, which would be $14 to $15. So it's just something to be aware of. Now with that said, if it disappoints and we have a lower high, then you would look for a potential break of 12 and then a push back down towards 11. So that's just a potential trading idea. So really that's it. Maybe one other thing I want to show you is just the VIX, and show you that it continues to hold these levels, this 15 level. If it gets down there, people are buying basically buying volatility. Now the downtrend's still intact, but you can also see, instead of just looking at it with all the moving averages, where you kind of just get a downward bias by just looking at it, you can see we do have periods to where it just trades sideways, and we're getting another one of those periods. The difference is pretty much every day the volatility index is open, it trades and closes on the higher end of the range, and that's been really for the last month or so. So just something to be aware of, and be careful. So because overall what I'm kind of looking for is a potential blow off top, and if we do get that, then you want to be a seller into the strength, and you'll know a blow off top because we'll get 2 to 4 days of just continuing higher prices after already nice move. And let me give you an example before we go. Okay, I got 2 examples for you. Here's one where you already had a nice uptrend, and then it just pops and just kind of keeps going, and then it trickles down back to reality, which was basically where it broke out. Here's another one where you had consolidation, and then you had just continuing buying, not even close to the 20-day moving average, which is this dotted line. It just continues higher and higher and higher. Eventually that's going to basically falter. And right now you are still pretty snug to the 20, but what I'm saying is if you start to get, basically a parabolic move where it really continues higher, you're going to want to sell into that strength and look to buy on weakness. So I hope this helps. Take care. Have a good night. Talk to you tomorrow.